Good afternoon, everyone. Apologies, I'm going to have to sit down because I twisted the ankle, so I cannot stand. Hopefully, you can see me. And thanks very much to the folks organizing these events for inviting me, especially as I'm known as the number one public critic of cryptocurrencies and blockchain and you name it. But I attend many of these conferences and I find that people find useful to have a contrarian view to check their own hypotheses where they're going. And hopefully I can make a number of constructive remarks. And I'm not going to emphasize right now today, unquote, the critique of crypto or blockchain, but I want to speak a little bit more about, one, the future of financial services, two, what's going to happen to cash and the debate about central bank digital currencies and how that's going to affect also the structure of banking, lending, and of financial services. But of course, I'll start my remark by making the point that, in my recent US banking Senate testimony, 40-page piece, I said that cryptocurrencies were the mother and father of all bubbles, now gone bust, and that blockchain, in my view, was the most overhyped technology ever, and provocatively I said, no better than an Excel spreadsheet or a database. And maybe in some of my remarks, some of this critique will come out. But the first observation I'll make is that, as you well know from the peak of early last year, even Bitcoin has fallen almost 85%. Thousands of other, call them altcoins or whatever you want to call them, have lost between 95 and 99% of their value. And even if you take the top 10 cryptocurrencies, including Bitcoin, from the peak have lost 90 to 95% of their value. So the view that this was a bubble gone bust has been proven right. Of course, supporters of Bitcoin say, we've seen this kind of a downturn in the past and 90% plus corrections, and then prices are going to go higher. I'm not going to discuss why I think that's a false view, but certainly the landscape this year is different than it was about a year ago. The other general remark I'll make on blockchain is that right now, given what's happened to cryptocurrencies, everybody is speaking about how blockchain can change not just finance, but also business, supply chains, and you name it. And there's a lot of talk about corporate DLT. But my sense of all this space is that if you scratch the surface of what people call corporate DLT or blockchain, it's not really blockchain. I mean, everything that's been done in the private sector where there is the IBMs of the world as opposed to the consultant is not public, is private, is not permissionless, is permissioned, is not based on a trustless system of verification, but trusted authorities, is not decentralized, is centralized, and therefore it's blockchain only, in name only, but in substance is effectively a fancy database. So I'm not sure even why people call it a DLT or blockchain. And in my view, there's not going to be any corporation or business or non-profit is going to put on a public, distributed, permissionless database that is distributed, all its P&L, all its balance sheets, all the relation with supplier, customer, and so on. There is no economic reason for doing so. There is no reason to put it on hundreds of thousands of different ledgers when you can have a nice centralized one that is permission and so on. So I'm skeptical again about corporate DLT, but maybe we can discuss that. Now I want to more center my attention on the future of currencies and what's going to be the future of financial services. And first observation I'll make is there are many problems with traditional financial systems and what people call legacy banking system. I was one of the biggest critics of banks, and I wrote in advance about why we'll have a global financial crisis, and I wrote a whole book criticizing the banking system. So I'm not beholden to legacy banks. And I do believe there is going to be a revolution in financial services, and that revolution is called Fintech. But my reading of Fintech is that it has absolutely nothing to do with blockchain and nothing to do with crypto. Effectively, if you're thinking about Fintech, is a combination of, on one side, artificial intelligence slash machine learning. 2, big data and using them with these algorithms. 3, Internet of Things and sensors and you name it. And this combination of things is going to be revolutionizing and is already revolutionizing everything from payment system, credit allocation, insurance, asset management, and a variety of capital market services that financial institutions are providing. And if you think about it, even just that payment system, as you know, any crypto payment system is a problem that Vitalik Buterin referred to as the inconsistent trinity, that you cannot have at the same time something that is scalable, that is decentralized, and is secure. And in the case of Bitcoin, you can do only 5 transactions per second. Visa allows you to do already 25,000 transactions per second. But the reality, there are already right now a wide range of digital payment systems that do billions of transactions a day, and are used by billions of people. In China, you have Alipay and WeChat Pay. In India, you have this UPI-based digital payment system. In Africa and Kenya, you have M-Pesa. In the United States, of course, you have PayPal, Venmo, Square, and you name it. So if you're thinking about doing on a scalable basis and in a secure way payment system, there is already plenty of stuff that massively scalable, is not decentralized, centralized, but is secure by any dimension, who does the job. And we're speaking about digital payment system. So you don't need crypto for any of that stuff. Leaving alone that most of cryptocurrencies are not currencies because they're not unit of account, they're not a means of payment, they're not a stable store of value. So payment system already being revolutionized by fintech, and I could describe in much more detail how credit allocation, insurance, asset management, and so on is also going to be revolutionized by fintech. So I believe in massive financial innovation and disruption, but all this fintech has zero to do with blockchain or with crypto. The other observation I'll make is that, of course, a number of central banks around the world, and I talked to many of them, and I talked to the IMF, are talking today about creating central bank digital currencies. And whenever a crypto publication hears about it, they get excited and say, you see, even central banks are going to create their own cryptocurrencies. And I think there is a massive amount of confusion because when central bank call about central bank digital currency or CBDC, again, those things are never going to have anything to do with either cryptocurrencies or with blockchain. First point is important here is that, of course, cash is being used less and less around the world. And there are some societies like Sweden or China where cash is almost disappeared. You know, even beggars in the street, a few of them you see in Stockholm or Beijing, they're using, you know, a mobile app on their cell phone, and then you can transfer money to them if you want to give them money. So definitely cash is going to be disappearing. And secondly, as I pointed out, there are already these digital payment systems that are alternative to cash, even if most of them are still embedded in legacy banking system. Most of them, not all of them, Alipay and WeChat Pay can be taught as in part things that are unrelated to you needing to have a bank account. With Venmo, with PayPal, you still need to have in the background a bank account. But as I pointed out, these new digital payment systems that are totally digital, already doing billions of transactions done by billions of people. Now, what's the issue with central bank digital currencies? Today, our current payment system is as follows. If you are a commercial bank, you have access to the balance sheet of a central bank. So you have an account, and it's a digital account, and you can use this balance sheet of the central bank to do transaction with the central bank and do transaction with all the other banks in the system. So the entire system of interbank transaction goes through a centralized ledger in the central bank. And therefore, everything that's interbank occurs through those kind of things. And the Fed funds rate in the US is the interest rate at which these things get done. The reality, however, is that apart from commercial banks that have access to the balance sheet of a central bank, everybody else in the economy, individuals, households, corporations, but also non-bank financial institutions, do not have access to the balance sheet of the central bank. And therefore, whenever they have to do payment transaction, how to do the payment transaction? They do them using private banks. And private banks essentially effectively create money when they make a loan to you. They create a deposit for you, or you can put money in the banking system, and using the private banking system essentially to do transactions. And of course, there are some transaction costs involved in it, and so on. So people use the bank account, they use wiring system, they use checks, or if you're using PayPal, Venmo, Square, and other system of this sort, effectively you are in the background having your own bank account that is linked then to this digital payment system. Now, it's not a very efficient system and implies some costly transaction costs, even if those transaction costs have fallen over time. Now, suppose you create a central bank digital currency. Effectively, what does it mean? Is it a cryptocurrency? No. Is it based on blockchain? No. Is it based on DLT and is distributed? No. It's like the current system. It's a centralized ledger where all transactions occur. It's totally monitored by the central bank. It's private. It's not permissionless and so on. It's restricted. But then suppose that every individual had also an account with the central bank. And therefore you had access to the balance sheet of the central bank the same way Citibank or JP Morgan or any other commercial bank does. Then you would not need to have a bank account. You would not need to use checks or use wire transfers or any deposit system, because you can use the balance sheet of the bank. So if I have to give you money, I can do it by transferring through the balance sheet of a central bank some money from my balance sheet to your balance sheet, to my account, to the other one, the same way the banks do in the interbank banking system. So when central banks are thinking about the central bank digital currency, they're thinking about a centralized system with a single ledger that expands that the balance sheet is available to every bank today, to every individual in the economy. And of course, if and when that were to occur, it will be a completely efficient system, it will be almost virtually costless, it will be safe, is guaranteed by the central bank, it will reduce a lot of the transaction cost. But think about the implication of a central bank creating a central bank digital currency. It will dominate, first of all, any cryptocurrencies. There's no reason why anybody should do any payment with a cryptocurrency. It would also dominate the current digital payment systems, the various Venmos, PayPals, and so on of the world, because why should you use those ones and pay even a small fee when you can do it for free with a central bank? And of course, it will also dominate the deposits that the individuals have in the private commercial banks, because why to have a deposit when you can do payments essentially using your free bank account with the central bank? So if and when, let me finish and then we can have any question and so on and have a discussion. So if and when any central bank in the world is going to decide to have a central bank digital currency in this centralized way, it's going to dominate every cryptocurrencies, it's going to dominate the current system of deposits in private banks, and it's going to also dominate the current various models, and there are different ones around the world, of digital payment system. In my view, it will be actually a revolution that makes actually any type of payment system much more efficient, zero cost, secure, and so on and so on. Now, some people argue, people will still want to use, unquote, cryptocurrencies, because with cryptocurrencies you have anonymity, while if you have a central bank digital currency, big brother central bank is going to monitor everything you do. I think that that argument is incorrect in a number of dimensions. First dimension, which is incorrect, as you know, Bitcoin is not really private. If law enforcement, actually authority, want to go after you, they prefer actually, if you do your illegal transaction with Bitcoin, they're much more easy to track and catch you than with private banks. And there are some alternative cryptocurrencies that are supposed to be fully, unquote, private, but I speak with central banks, and there is no central bank in the world is going to ever allow a Monero of the world and so on to having totally private transactions where any criminal, any terrorist, any tax evader can essentially have purely private transaction. That's never going to happen. They're going to find plenty of ways, and I'm not going to discuss them, in which that action cannot occur. Second observation, this central bank digital currency doesn't have to be public in the sense of the central bank having access to every transaction you have. Today, if you get audited by a tax authority, they have the right, through a law enforcement agency, to go and say, show me your bank accounts, and under good cause in a democracy, you have to show all your bank accounts, so even your bank accounts are not private. So if and when there is a central bank digital currency, the standard is, unquote, privacy and anonymity, but if the government thinks that I'm evading my taxes, they can go to a law enforcement authority and say, sorry, you have to show which transaction you were doing with the central bank by being payment system, because we have to monitor whether you declare your income, assets, and so on. So this idea that you'll have Big Brother that is watching you and is going to monitor everything you do, and therefore nobody's going to want to use this system, is false. Even today, you don't have privacy. If a true law enforcement authority wants to look at your private financial bank account, the same thing is going to happen with a central bank digital currency. So you can have the default being privacy, and then when needed and according to law, your account being monitored and audited as needed by law enforcement. So I don't think that that's going to be a problem, and anybody is going to worry about it. However, if you think about the consequences of on the financial system of having a central bank digital currency, then it completely changes the nature of the banking system, because today the banking system is based on a fractional reserve banking system where the banks have only a small amount of their assets that are essentially cash or cash-like instruments, reserves or excess reserves, and whenever they make a loan, they create effectively money and deposits, and therefore you have essentially only a fraction of the liability of the banking system, say deposits that are backed by liquid assets, and that's how you make, with fractional banking system, multiplication of loans. Now, suppose you have a central bank digital currency, what's going to happen? That's going to dominate any deposits in the banking system, because anybody with a deposit in the banking system is going to essentially move their money to their own account with the central bank. And then the question becomes how banks are going to be financing their lending. Effectively, the solution, or at least one of them, is the following one. Instead of having a fractional reserve banking system, you create, like has been proposed in the past, a narrow banking system where payment systems are fully backed, like they would be in a narrow banking system. But instead of having many private narrow banks, there is only one. There is the central bank that provides the payment system. And then if private banks want to lend you money for business activity, for mortgages, they have to borrow long-term, with long-term borrowing from savers, to make long-term, essentially, lending and investments. And that actually resolves many problems, because today, with a fractional reserve banking system, you have a maturity transformation. Most of the deposits are short-term. Most of the assets of the banks are long-term. And if there's a bank run, then there's a risk of a run on the banking system. Because of that, you need the deposit insurance. Because of that, you need a lender of last resort. But that creates moral hazard. And once you have moral hazard, then you have to have supervision and regulation of the banking system. You create lots of things. If you have a narrow bank, you resolve the issue of the payment system. And if you have instead financial institutions that borrow long-term and make long-term lending, there is no maturity mismatch, and the risk of bank runs and other problems that have to do with moral hazard is significantly reduced. Now, that's, however, it's a revolution, because it means essentially traditional banks disappear, because nobody's going to have a deposit with the banking system. Now, an alternative solution to that problem is to say, we're going to avoid this intermediation of the private bank. So all the money that goes into the central bank account from the private deposit is going to be lent back by the central bank to the private banks. And therefore, these private banks can use these central bank deposits to make lending decisions like today. So you don't get the disintermediation. But of course, you get a situation in which the only depositor in the banking private banks is one, the central bank as opposed to million of private depositors, and then people worry about the potential for government interfering into your lending decision, right? You know, Big Brother is going to tell you who to lend to you, and so on and so on. So that might be a problem if you don't want to go to narrow banking. The third solution is the one that has been suggested by Christine Lagarde at the IMF, and says we can have the current system with some private and public partnership. Your deposits are still with the private banks, but the whole settlement occurs through this digital system that's intermediated by the central bank. So effectively, you have access to the central bank balance sheet as an individual through essentially your private bank, but you avoid all the inefficiency cost of transaction costs that exist today. You still have a fractional reserve banking system then, and the problems of potential bank runs or moral hazard, and you name it, remain. But that might be a solution that it doesn't go to the extreme of having narrow banking on one side or Big Brother lending everything to the private sector on the other side. So the gist of it, in my view, is that one, we're going to have a revolution in financial services. It's fintech, and as I pointed out, has nothing to do with crypto or blockchain. Two, that eventually cash is going to disappear, and actually that implies interesting things also for monetary policy, like the ability of central banks to go even more negative with policy rates when it's needed, like in a severe economic recession. Three, that these central bank digital currencies are not going to have anything to do, and if you speak to any central bank, none of them is going to do it by a distributed ledger. It doesn't make any sense. None of them is going to do it. So it's going to be a centralized system like the current one that they deal with the banks. And fourth, and more importantly, it has massive implication for the structure of our current fractional reserve banking system. And it might radically change the nature of that towards narrow banking and loanable fund financial institutions. And if you don't want to do that, then you have to think about creative alternatives. So that's the debate that is occurring among central bank, and it's an important one, but has nothing to do with crypto and has nothing to do with blockchain. So that's my take on what's the future of digital cash, what's the future of financial intermediation, and what's the future of banking system.